Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me is Pavitra Parekh, and it's turned out to be a very quiet morning of trade. Range-bound day, muted action so far. We've got important cues that the markets are tracking. One, the counting is currently underway in Gujarat as well as Himachal Pradesh. And it appears in Gujarat, BJP could come back to power for a record 7th time. That's absolutely like stunning, the kind of results that we're seeing over there. So that's cue number 1. 2, it's also the weekly options expiry. And if you look at global cues, you've got the jobs data, the weekly jobs jobless claims that the street will be tracking very closely. So ahead of that, things are on the quieter side.
Yeah, and I mean, in terms of cues, you've also seen that big drop in crude prices. So it'll be important to see where that really moves. Yes, we're watching the entire China reopening, which was announced yesterday. So let's see, because Hang Seng now is seeing a big gain. It's actually one of the top gaining indices with a gain of around 2%. So Hang Seng doing very well. It'll be interesting to see how that entire reopening plays out. For our own markets, once again, it is the PSU Bank Index, which is doing very well. So that one will come up for you. That one is holding up with good gains. You have the entire FMCG pack also, which is holding up quite well. And, if you take a look at the downside, today, of course, it is pharma and also IT. And in fact, for this entire past week, these have been the two indices which have seen perhaps the highest cut. So the IT index for the week is down around 3.2%. You have the pharma index, which is down 2.3%. So those are the places where you've seen some weakness creep in. And also on the losing side today, you have a lot of the sugar names. So do keep your eye out on that pack as well. The likes of Triveni or Bajaj Hindustan are some. But there's an interesting note from Nomura and the entire auto pack. So Reema, you have the highlights from that?
So Nomura is saying that their channel checks seem to suggest that the blended discounts, which is a combination of the cashback, your exchange offers, bonuses, corporate offers, etc., offered by car companies in the month of December is higher than what we've seen in the month of November as well as December of last year. But this is more applicable for the small car segment, maybe your Alto 800, Wagoner, etc. And that is indicating weakening demand for the small cars. So that is the numbers that Nomura has put up. And you would see that the discounts which are being offered in the month of December is higher than what we had in December of last year. They also go on to say that typically December does tend to have higher discounts because you are clearing out your year-end inventory, and next year you've got new launches coming up. But this time in the small car segment, discounts have gone up. In fact, discounts in the CNG variants have touched 60,000, which is the highest ever. But the automatic segment does not have any major discounts. And they're saying that if the small car demand continues to remain weak, then there is a possibility that discounts will be even higher going ahead, which can negate the benefit on the margins due to lower commodity prices, right? Currently, the street is anticipating that in H2, margins will improve because commodity prices are softening. But if the auto companies decide to offer higher discounts on small cars because of weakening demand, then that margin tailwind gets nullified, or it's got a counter effect over there. They're also saying that the passenger vehicles, particularly all of it combined, that's your luxury, your sedans as well as the smaller car segment, industry growth rate is likely to normalize. So this year it's expected to be 25%, but next year it's going to come to only about 6 to 8%, and thereafter in FY24 even cost of ownership is going to go up because of the implementation of BS6 phase 2 from April of 23 and the mandatory fitment of 6 airbags from October 23. So 1 year later will further increase the cost of ownership, so which will also weigh on the FY24 growth estimates, which is why they're saying that apart from the high base effect, so this year's growth will be 25%, but next year growth for passenger vehicles will come down to single digits, 6 to 8%. But let's cut across now to our managing editor